So number one, I've created a YouTube channel now for the recordings. It'll be a private channel. You can only access it if you get the link. I've uploaded the last week's video. By next week, I'll have all 17 videos uploaded. This will make it easier for everybody to get in there. Yeah, it's a lot easier to deal with. The couple things I wanted to ask you, because you're the participants. Do you care? Now the one I uploaded, I didn't put anybody's name in it. I can block out the names. Would you rather your name blocked out? It's only first names we're using. Would you rather your name blocked out, or do you care? Does anybody care if their name shows up just like it shows up there? Would you rather it's not? It's a private channel. It's not public. But it doesn't mean that someone couldn't see it. You know, it's up to you though. Otherwise, it just says user 1, user 2. Does anybody care about that? Okay. Yeah, it's just your first name. You know, it's just your first name. It's not like it's full names, but I wanted to keep everyone's privacy, and it's important to me. So we'll be doing that moving forward. I will give you the link to that YouTube channel, and believe it or not, I'm working with my 13-year-old son to set this up, and he's you know, yeah, Justin, if you don't want me to use your name, you know, your name will come up just in golf. If nobody wants me to use their name, I won't. You just won't know who's asking what. And if you don't care about that, it's just another step I got to take to edit the video. It's up to you folks. So, either or, I can do it. Let's do this. Let me block out the names. I think we should block out the names. Now, I see Justin has his full name on there. That's pretty important. Okay. All right. If somebody at any point has an issue with it, you let me know, okay? Yeah. If somebody has an issue with it, then I'll rip the video out. I just, you know, we're talking about a YouTube channel that I've created for the videos now. So before this meeting's out, I'm gonna do a 30-minute video tonight instead of the hour-long one, just because I got to do the work on this site. But from now on, after the session's done, because I got somebody else dealing with it, within 24 hours it should be up and running. Now I'm gonna see what I can do. My son will help me with this. He will show me how to give you a alert that, you know, that the new video is there. So you know, you'll subscribe to this channel. The channel will tell you when a new video is up, and that way you guys will know when the video is up, and you can watch it anytime you want, as many times as you want. Okay? Sound good? Okay, good. All right, the other thing I'm working on, this might take a little bit longer, really, to figure out the best way to do this, because I do not build websites. I know there's lots of people out there that do, but what I want to do is I want to take that Excel sheet and put it into a website for you. Okay? So that what you can do is you can go to this website, you can put in the information, and it will do the calculations for you, but it'll be web-based. And what I want to do is allow it to start generating the email for you. The email based on the data. So it'll bring up a box and it'll say this is the email, and basically it's the email tab, right? It says, look, I'm interested in this property. These are the clauses that I want in the contract. This is the VTB price. This is the cash price. I want that automated for you so you can do that a lot faster. Okay, so I'm working on that. I'm hoping, you know, once I get someone who knows how to do it, that I you know, and review it. I'm taking a week, 2 weeks tops, but we should be able to see that before the end of September. We should be able to see the ability to go onto a website and put that information in there. And that website will probably it's going to be blocked. It's going to be blocked username and password only for the people of our group to be able to use. Because I created it. It's our tool, and I don't want to open it up. Okay. Any questions about that, or any ideas, or any other things you can think of that you'd like to see? Okay, some people are typing. If you were with us last week, the video, like I said, is going to be up. A fictionalized version of the whole thing. Okay, I know what you mean. Of the whole process of getting an email, right? You know what? I asked Tarek to do a video about the financing and to explain the C's, the credits, the thing about credit and how it is, a short video, and I'll put it up on the website also. So he's agreed to do that. I will get my lawyer to do the same, to put up a video. Hopefully he'll do it, and it'll be on YouTube. I don't know, you know, it might be just voice only, who knows. We have him. Well, we're going to invite him back. So we could do a video, you know, on the process of getting the property from start to finish and using the tool. We can do that. What else did I want to talk about? Okay, so there's some cool things that I'm looking into for financing. After talking to Tarek, he's checking into some things, but as far as it looks like, and I gotta get confirmation of this, it looks like we're allowed to use our RSPs to invest in properties for ourselves. Everybody get that? Yeah, I know. It's pretty cool. It's amazing, actually. So I'm trying to, this is what I'm trying to do. I'm trying to figure out the exact process. You mean your RSP from your work, you mean, Justin? I'll check into that. Good question. Okay? So this is what I'm going to figure out. I'm going to figure out how we can use our own RSPs to investment properties, what the process is. I'm trying to set it up so my lawyer and Tarek, who's my financial advisor, can execute the deal for us. Hopefully they can actually make it happen for us. And then once that happens, and I got to make sure I find a company that does it. So there's a few things that I'm researching right now, but this is a big deal. This is a huge deal, because if this is something that we can do easily, what I'm going to do is suggest what I want to spend actually the next couple weeks on is us raising money and finding buyers. That's what I want to spend time on. Okay, I want you to look for property, but I want it to be secondary to finding investors, finding money, you know, understanding financing. I want us to raise capital. That's what I want us to do. And if we can figure out the proper process of this new thing that I've discovered, we can really attract a lot of new money. Because think about it, if we can get the process down, and we know we can do it, and and we're doing it. Obviously, we have to do it legitimately, legally, obviously. But once that's done, we really have a real huge advantage for investors, right? So we walk up to people with RSPs and say, look, you know, would you be interested in doing this? And then what would happen is they could be part of the process of investing. We're not getting approved because you still got to get approved legally. You know, the way it's set up is you still have to get approved. But they would get approved, but they would be able to get the money right out of their RSP, and they would be partners with us. And it would make it a lot easier for people to use RSPs, because in this case, we'd be using them for, you know, for the approval and the money. You know, we're the brains of the operation. That's why, you know, we put the deals together. But if we have a process that's simple and easy, and well, simple and easy for us, then it makes it easy for them. They just hand over the process to us, and then we walk through it with them and make it happen. I'm really excited about this. I got really excited. Me and Tarek were talking about this. It was very exciting. I think it's a huge opportunity for us to raise some serious capital fast. And what I want to do is get that process built and put together, and then be able to share that with you. And then I want you to go out and raise capital and find money. And that way, when the deals come, we can have the money waiting for us. How's that sound? Any comments or questions? Is everybody just stunned? Yeah, yeah, me too. Me too, really. Me too. So I'm figuring out that with Tarek, so I should have some answers by next week on how we're going to pull this off or get us a lot closer to it. Any questions about that? Good. Yeah, sounds really good. Sounds really good. It's one of those things that's kind of undercover that nobody does and nobody talks about. So this will be very cool for us if we can create the process. I'm working with Tark to do that and do that properly, and that will really allow us to do some crazy stuff. No, we don't need licensing at all to do that. No. So John, what we're doing, all we're doing, John, is we're offering an opportunity, and we need to know the process to be able to do it. We don't need to be licensed, but we do need a lawyer, and we do need a financial advisor, right? We're just giving the option to people, and I'll tell you right now, that's huge. This is really big news. I can't tell you how big it is. It's unbelievable, actually, that getting access to that money would be massive. Yeah, of course, John. We're not doing it otherwise, right? Of course, it has to be legit. This is why I'm working with my attorney and financial advisor to make sure that the process is step by step. And then when it's together, when I know they can pull that off legally and the proper way of doing it, then I'm going to consult my accountant on for the CRA impact, because I'm sure I want to make sure everything's covered. And then once that's done, I'll share the process with you, and then we can do that together. That's right, John. Exactly. And that's what it comes down to. If we offer better ways to do it, then we're going to be able to raise money. Are the buyers people wanting to buy a property? Yeah, Rose. They're people looking for investment properties. They're looking for themselves. They're also maybe looking as end users. So here, what I'm going to do is I'm going to tell you to try something. Okay. All right. So here it is. Well, not in that case, Rose. We could become private lenders for sure with our RSPs. Concerning the buyers, you're absolutely right. Concerning the buyers, we'd like buyers before we go out and find property. Do you know what I mean? So why don't you all? I'll give you an example. Okay, so if we have RSP money, we can become private lenders. Very easy with this process. If we have RSPs, we can actually use the money to invest directly into real estate from. Okay, that's what I was making. And the other thing I was saying was about buyers, finding buyers. So we find buyers before we find property. Okay. Okay. So let me give you a strategy for attracting buyers. Okay. Now you can set up an ad. You can set up an ad on Kijiji or Craigslist that says 3-bedroom, 2-bath house. Pick a particular area that you know, and what you do. I'd rather, obviously, it was realistic, but I'll give you an example of attracting buyers. And if you're working with partners, you can legitimately do this. But what you're saying is, I have a 3-bedroom, 2-bath apartment. It could be a condo, it could be a house for sale at a competitive price. Make sure it's a discounted price. And then what happens is when the people call you, you know, that's your opportunity to establish a relationship with a potential buyer. You let them know that the property is no longer there, it's gone, but you often, you know, come across properties like this. Would they be interested, and are they interested in this specific property? And then you can find it for them. Did everybody get that? Well, yeah, it is, but yeah, it works really well in Zaya. It's extremely effective. You'll get a lot of calls, right? And you know, it's you trying to find cash buyers. It's you trying to find cash buyers. Well, not cash buyers necessarily, but people who are ready to buy. Make sense? So, you know, those of you, how many of you own a house? Okay. Okay. All right. Anybody who owns a house can list, you know, even your own house privately through Kijiji and decide, you know, it's no longer available when they call you. If you want to look at your own area, if you're not interested in your own area, I pick an area that you know is in a particular an area that the area that you think there's opportunity, and you know use that area, and you know 2-bedroom, 2-bedroom, 3-bedroom, 2-bath, not a lot of detail, 3-bedroom, 2-bath, and must sell kind of statement, and the area, and you know, in a competitive price, and see what kind of activity you get from the ad. Anybody want to try that this week? So, Vivian, what we're doing is we're trying to attract buyers and investors. That's what I want you to focus on for the next 2 weeks. So you put an ad on Kijiji. There you go. Sean's got it. And the ad reads 3-bedroom, 2-bath for sale at a competitive price. Must sell fast. And I would actually put a price. Know the market the area that you're doing. Put a price. And what you're trying to do is attract people to you're attracting buyers. So someone calls you and says, look, I'm interested in that property, and you let them know the property is no longer, it's gone, or it's been unlisted, whatever you want to say. And but you come across properties similar to this property all the time. If they're interested, are they interested in a property like that, you can help them out. And what you're doing basically is being able to wholesale or flip properties to these people. You're just trying to find buyers. Buyers, yeah. It's a strategy to find buyers. Does that make sense? Yeah. If you're uncomfortable in doing it for any reason, you don't have to do it. It's totally up to you. You know, it's what we're trying to do is help these people out by letting them know that we find properties. This is a simple way to attract, you know, to get noticed, people to notice you, that this is what you do, you find properties. That way what they'll do is they'll tell you, look, yeah, I'm looking for property like this, or in this area. You say, oh, okay, give me the details, and, you know, if and when I come across that property, I'll email you directly. I won't even post it. And you tell them up front, you say, this is the way we make money. We either find properties that are in, you know, good or perfect condition. They're okay. They're, you know, slightly distressed, but, you know, and we will wholesale them to you. Well, basically, you'll pay us a finder's fee, and we'll give them to you. It'll be a discounted price, and or, you know, we'll get a property, we'll fix it up and flip it to you. you know, either or you're going to get a deal. You know, we understand that we're going to give you a deal. We just want to let you know that obviously we make money. And how do we find a property for them? So Vivian, they would give you the information of what type of property they're looking for, and that gives you a focus, right? That allows you to focus in a particular area. So if they say I'm looking for a 3-bedroom, 2-bath, say in just outside Montreal in this particular neighborhood, you know, these neighborhoods would be good for me. I'm looking for a property in that area. Just say no problem, thank you. Let me get all the details that that you need, that are important to you, and then what I can do is see if I can find you. If I come across the property, I can find it. Okay, but that would be listed on MLS. They can see at themselves. No, Vivian, we wouldn't necessarily get a property from MLS. But even if we did, Vivian, we would negotiate, right? We're negotiators, and if we couldn't get a deal where we could get this property, this person, then we wouldn't be able to help them. Yeah, exactly. What value would we be adding? We wouldn't be adding any value if we're not relisting a property, right? Obviously, we'd have to be able to get a discount on that property through our, our skills of negotiating and or, finding properties that are those hidden gems, that maybe are not listed, that are, or listed, and we get them under contract and negotiate a better price and then make our $5,000, or maybe we flip it to them because it's a distressed property. And you got to remember, distressed properties, are not going to be listed on MLS typically. They might be for sale by owner, but also there's the ability for us to figure out that, get that information by doing some research on particular properties that are not in perfect condition. You got to remember, a lot of these properties are not in tip-top shape. That's why we're getting a deal for them. And if we can get those properties under contract and get a good deal and decide to sell it. And this is a question of, you're not necessarily looking for a property for yourself, but it's nice to have buyers and investors, and that's what I want to work on for the next couple of weeks, buyers and investors. Strategies for buyers and investors. Now, we talked a little bit about RSPs. I told you what I was going to do and find out how we can do that legally, legitimately, and the process for doing that, to use our own RSPs for our own investments, which will open up big, deep pockets, I believe, and it'll help us, find investors. I don't know how many of you have RSPs with money in it, but if we know how to take that money and invest directly, that'd be pretty cool. That'd be pretty amazing. And I'm talking about using RSP money, your own RSP money, to use for investment property. And check this out: when you use the money from your RSP, you have to charge yourself interest, right? You have to use the bank rate for interest. That's a tax write-off. That's a tax write-off for your investment. That's a tax write-off. Everybody get that? So you could use RSP money, pay the interest, right? And then claim the interest as an expense against the property. Get your own RSP. Okay, hold on one second. Sorry guys, at the thing here. Okay, Sam, what would you think working and building a script process? Yeah, we can do that, Rose. If you want, we can do that together. Something that we can work on together. Jean, exact. A lot of properties are not listed on MLS.ca. Good, Jean. What types of returns do investors typically look for if they buy a wholesale contract? Jean's saying 5K minimum. I mean that's about the average, Justin. It really depends on the property. If the property, excuse me, depends on the price. Excuse me, I'm sorry, guys. Justin, if you're talking about returns, I can tell you this, and this is the insanity of it all. Across Canada, you're looking at about average 3% return. That's what people are buying properties for as a return. So if a property was $100,000 property, the net operating income in the 3,000 range typically is considered good, is okay. That's an okay deal. You give them 5-6% return, that's huge. Net operating income. That's not including financing, and that's cap rate. That's really the same thing as cap rate. Does everybody understand that? But this is an exercise I asked. Okay, I'll explain it. So this is a good exercise to do when you're running numbers on properties. Certain areas run in a particular range, during a, whatever economic situation or how the market's going. So let's say that you're looking into a neighborhood and you find out this particular neighborhood, after running numbers, on average, the cap rate is 3%, okay, which is about the average. Across Canada is about 3%, okay? Certain areas are going to be a little higher, certain a little lower, but, Toronto's are going to be lower, Vancouver's are going to be lower, in that range. They'll be 2.5, maybe they'll be 3.5. Doesn't really matter. Just find out what the number is, okay? So 3 cap rate means 3% return, okay? Net operating income. So if a $100,000 property, you can buy the $100,000 property cash. After you pay all the bills, the income that comes in from the rent or rents will give you a 3% return, which would be $3,000. Does that make sense to everybody? Is everybody good on that point there? Good. Okay. So when you find a property that has a 6% or 7% cap rate, that's a deal in most areas. Not every area, but in most deals. So when you present that to a potential buyer, I have a property, and these are the numbers on the property. That's pretty attractive to them against the rest of the market. Now, of course, this is really a function of price. Does everybody understand that? Right? The lower the price, the higher the cap rate. Right? The higher the return. Right? So if we went $100,000 property producing $3,000 net operating income, then if we brought that price to $50,000, the net operating income would go to $6,000, which would be 6%. My apologies. Actually, that would go. Sorry, it would stay at 3,000, but the return would be 6%. Does that make sense to everybody? Hold on. Let me do something here. Okay, let's see. Chart. Let's get rid of that. Give me 1 second. Okay, let's try it this way. Okay, give me 1 second. Now this marker that I use, right, sometimes isn't the best. So let's give me 1 second. Let me get. Okay. Give me 1 second. Okay, here we go. Got it. All right. Let's do this. Let's put the marker in. There we go. All right. 100K is the purchase price, right? Purchase price. Okay, that's the purchase price. Okay, $3,000. Okay, per year. Okay, this is the NOI. Does everybody know what NOI is? NOI is net operating income. Okay, net operating income. Which means after I pay all my bills, I make $3,000. Okay, which would be, say, per year, it costs me $10,000, 10K. It cost me 10K for expenses, and income equals 13K from rent, which could be, let's pretend, I don't know, that's just over $1,000. It would be, well, let's do the math and find out. So the rent is 13,000 divided by 12. $1,083.33 a month. That's what we bring in. Our expenses, all our expenses, taxes, maintenance, insurance, vacancy, all that, leaves us with $3,000. Okay? That's if this property is completely paid off. Okay? Now that's what return? What return is that? If we make $3,000 net operating income off a $100,000 purchase price property, what's that as a return? You can tell me 3%. Good. We also can call this, when it's referenced to property, what other name do we use? Instead of return, we call it cap rate. Perfect, girls. You're absolutely right. It's cap rate. That's exactly what it is. Okay? So when someone, and most properties in Canada are sitting in the range of 2.5, 3.5, maybe a 4. Depends. Which means return, right? So going back to Justin's question, what kind of return? Well, and this is why it's so important. This is so important. Is when you have your properties, every dollar you add is $10 in value to us for the property, right? Because every dollar to us, actual net operating income moves our price up $10, okay? Because we work on a 10 cap rate. That's investor to investor. But really, in the market, when you raise your income by $1, you can get up to $30 in income in extra purchase price. Does everybody understand that? That one's a little more complicated. All right. I think most of you are ready for this. I've been wanting to share this with you, but you worry. All right. That it's too much too soon. Okay. Here. Let me okay, the whiteboard here. Share whiteboard. Okay, let's do another one. Okay, now here. Okay, let's do $100,000 property. Oops. Okay, 100K is the property. Okay, that's our property. That's the value. That's the market value. That's the price. Okay. Now, if this property makes 10K per year, okay, NOI, the ROI, let's give me a sec. equals 10%, which is also a cap rate of 10. Does everybody follow me so far? Same thing. Is anybody not clear on this point so far? We good? Well, net operating income is the money that you make from the property, right? So it's not the same. The only reason it looks the same here is because it's a $100,000 property, right? But that could be a $3,000. If we made $3,000 at the end of the year, our ROI would be 3, and our cap rate would be 3 on a $100,000 property. But that's going to look different on a $200,000 property, $300,000 property. It's going to look different. Because on a $200,000 property, you can still make 10K, right? That'd be your net operating income would be 10,000, but your ROI would be 5%, and your cap rate would be 5. Does that make sense? It just looks the same, yeah. It just looks the same because I'm using a $100,000 property because it's just simpler to look at. Does that make sense? The NOI is the net operating income, which means after I paid all my bills, this is how much I made. The return on investment is the income divided by the investment, right? See, income, which is 10K, divided by income divided by this. That's how you get that. And that's how you get that. Does that make sense? ROI is return on investment. NOI is just net operating income. That number could be anything. Does that make sense? Okay, good. Now watch. Okay? Now that we understand this will become a lot clearer to you. So if I can, let's do another whiteboard. One sec. Okay, so now we're going to work with the same property, okay? Now, if I have a $100,000 same property, let's do that again. So I have the same property, 100K. Okay, 100K. And let's say, right, instead of me making 10,000, I've increased the rents. And I've reduced my expenses because I've done some things. There was some bad management. I'm better managed now. You know, my vacancy's in a better place. It's where it should be. And instead of me making on that 100,000, instead of me making 10K, right, I'm making 11K. Everybody see that? Now, I want you to recognize this, okay? 11K, which is an extra $1,000, right? $1,000 divided by 12. That's $83 a month more. You're making $83 more a month, okay? Okay. Because of this, in the relationship, this house now, all right, is not worth $100,000. What's it worth? Who can tell me what this house is worth now? It's worth 110K. You see that? It didn't go up 30% more. I'll get to that. I'll get to that, Rose. Okay? So it went up $10,000 because when we look at this one here, right? Hold on. Make this smaller. When we look at this one here, the reason, we look for properties that have a cap rate of a minimum of 10, which is a 10% return. We value that property 10 times its cap rate to us, 10 times. So for us, the cap rate of 10 produces a $100,000 property. Everybody understand that? Does that make sense to everybody? Okay. So every $1,000 we raise in income, net operating income, right? This over here, this number here, the net operating income, that raises our value by 10,000. Every 1,000 raises it by 10,000. Does everybody follow me so far? And this is us forcing the value up. We force the value up by better managing the property. Is this clear to everybody? Because John, the reason we use 10, the reason 10 is the magic number for us, is because when we get a 10% return, right? Because a 10% return is a good return on any investment, right? It's decent. 10% is decent. What we can do, John, is now we can leverage that 10 into a 20, 30, or 40% return with creative financing. But when you have a 3% cap rate, creative financing really isn't effective most times, because what it's going to do is it's going to violate one of our rules, and our rule is don't hold a property that doesn't cash flow, right? And when you have a 3% cap rate, you start doing some creative financing, you start getting some you deliberately go into debt, get a mortgage, all of a sudden you're negative cash flow. You have no money into the property maybe, but you're losing money. You're still losing money, and that's not what we're interested in. We need cash flow plus cap rate. And this is why we're so selective. Does that make sense? You can't do nothing really, John, with a 3% cap rate. You can't. A 3% return, there's not much we can do. But you start getting 10% will allow you to get creative financing and still make money, and still, don't violate the rule of cash flow. It'll still give you cash flow. Does that make sense to everybody? The reason is, okay, I'll try it a different way. So sometimes this is too deep for people, and that's okay. It's okay, okay? But I want you to understand how prices come about, okay? How they work, okay? It's really driven by, people obviously buying properties. That's okay. No, it's okay. It's really driven by people buying properties. But there's limits to where prices can go. And the reason is because the buyers really, the demand is what really drives it. Okay? Supply is supply. Supply is supply. But demand really drives prices up. You can having more supply or less supply, demand is demand, right? So when we have the demand for those properties, right? If the supply is low, yep, you're going to see prices go up. But there's a point where the demand, there won't be any demand. They'll just move on to another market. Do you know what I'm saying? Where it becomes so expensive, people can't afford to buy those houses, right? And that's what's happening in different markets around the country. Toronto, Vancouver, okay? Now, let's just focus on income properties, okay? So forget about all the other properties. Just think income properties, okay? Is everybody good with me? Just talking about income properties, okay? Income properties are really driven by net operating income. That's what drives the price, net operating income, okay? Okay? So to give you an example, let's go with another share. If a property, think about this. Let's pretend that a property, let's pull up another whiteboard here. Let's pretend a property is 100,000. Let's do that again. It's a $100,000 property. Okay, 100,000 K. And the net operating income, which everybody understands, right? That's after I pay all my bills, equals negative $1,000 at the end of the year. Who's going to buy that house? That's no financing. That's just paying cash. So the return on that is what? Its ROI is negative 1%. Right? Negative 1%. Everybody see that? Okay. Now, the reason this is not acceptable, can anybody tell me why this is not an acceptable return? Why is this not an acceptable return? Can anybody tell me? Well, you're right. It's not an asset at this point. No cash flow. Yeah. But what really makes this non-acceptable? Can anybody give me some other ideas? Why is this non-acceptable as an investment today? Our rules, yeah. I'm just talking about the general public. Why wouldn't the general public be okay with that? It's losing money. Yeah, you're right. Now, why is that a problem today? Why is that a problem today, though? Okay, it's not profitable. Okay, this is what I want you to understand. This is what I want you to understand. When you look out into the marketplace, right, you got to look, what is the standard return? What is the standard return? So tell me, on a R, hold on. On an RSSP, people are making what on average? Yeah, it's about 3. Okay, 3, maybe 4%. Okay, but you got to deal with what? What do you got to deal with? What do you got to deal with? Yeah, about 3%. Yeah. But tax and fees, yeah, that's after you pay. That's inside your RSP. Obviously, when that comes out, you're going to have impact. But what do you got to deal with to get that 3-4%? The big problem with the RSP is the money's in the stock market, and you got to deal with the swings, huge swings, right? You could be up, you could be down. It's emotional. It's a lot of turmoil for 3%. If you think about it, being in the stock market, you know, to carve out 3%, that's pretty harsh, right? To gain that, okay? Right? That's if you make 3%. You could end up flat. Who knows? But at the end of the day, you're not making much for the heartache. Okay? But at the end of the day, it's 3%. It's around 3 to 4%. What is a GIC get you? GIC. Yeah. GIC's maybe going to get you 1, maybe 1.5, okay? But that's guaranteed, right? No headaches, no problems, bank's guaranteeing it, it's 1.5%. Now think about this. To go to a 3%, you got to deal with the stock market. Yeah, you're right, it is a loser. Both those are hovering at 0 or loss, right? GICs are, you know, yeah, 1.5, you're losing money every year. On average. In Canada, the average last 100 years is around 3%. You're losing money over time, okay? But that's the rate, right? Okay? Now with property, what do you think the going rate is? 3%? It's 3%. It's the same as these other, it's all in the same range. Does everybody see that? That's why, yeah, it sucks. It sucks. That's why properties, the prices hover around that 3% return, because that's what the market's doing. Now, let's pretend, okay, that your RSP, oops, let's try that color. Let's say RSPs were giving you 6%. What do you think would happen to GICs? They go up to 3%. And where would houses be? Around the 6% mark. You see that? Does everybody see that? Right. Okay. Now that could happen, right? That could happen, but it typically only happens when? When do you think that happens? When RSPs go up to 6, GICs go up to 3, and house cap rates go up to 6 return. What happens? What's happening in a market like this, in an economy like this? Interest rates rise, right? And when interest rates rise, what are they combating? Why do they raise them? Why did interest rates rise? Yeah, inflation. So inflation at 3%, they're all at 3%. But if inflation's at 6%, well, yeah, these are going to all go up. These are all going to go up. Everybody see that? They're all going to go up. You know, there was a time where you could put money in a GIC, I'm not kidding you, and get a 10% return. In a GIC, 10% return. Now, what was going on in the marketplace when you were getting a 10% return? Yeah, the 80s. You got it, John. What was going on? Well, there was inflation, hyperinflation in the 80s, right? You were getting 10% for a GIC, but mortgage rates were like 18. You know, they were in the teens, 15, 14, 15, 16. You know, as high as, you know, it broke 21% for a period, 1982. Is everybody following me? Good, good. So this is the point I want you to take away from this, okay? If today we're sitting in the 3% range for all these three, right, for return, then we can start to look at how they value property, what price range an area, you know, a property is going to be for. They're all in the 3 range. You do a reverse, and this is how it works. We go, okay, you know, market returns are around 3%, no problem. What's the price of this property in the market? As a rule, what's price going to be? Well, what do? I find out, right, the net, I find out the net operating income, say the net operating income, give me a number, give me any number. What's the number? 10. Well, let's do a different number. I want you to give me a different number. The net operating income is 23,000, okay? So let's go 23,000. I want to show you how easy this is. 23K a year. If the net operating income on this property is 20, forget about what they tell you the price is. Forget about what the market, blah, 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 blah. That doesn't matter. If the net operating income is 23K, okay, that's after I pay all my bills, I make $23,000. What do you think the market's going to say this property's worth in the range of? Anybody? How are we going to figure that out? 230? No, Sergey, that's what we would say it's worth. But the market works on, they don't work on a 10 cap rate, 10% return. They work on a 3% return. How many times does 3 go into 100? How many times? That's right. So you multiply, you ready for this? You multiply this by 33. Who can do that for me? What is 33 times 23,000? There you go. 759. Does everybody see that? See what we did? Who's learning something? Is this cool or what? Pretty amazing. It is amazing. Okay. So what I want you to understand, and this is important. First of all, 3% cap rate is pretty standard because that's where inflation and other, you know, the stock market and relative to GICs, that's where they're sitting. It could be higher, it could be lower. You know, but the market, there'd be something going on in the market. That being said, on average, it's around 3% across the country. On average, it's about 3%. Could be a little bit higher, a little bit lower. What we want to do is we want to find out, we want to go into a neighborhood and we want to find out through running, 3, 4, 5 different properties, income properties. We want to find out what this area is valuing property. Okay? So I'll give you an example. Let's say we walk into an area and their cap rate, their return on investment, is not 3, it's 4. It's 4.5%. That's what it is. 4.5%. Right? 4.5, which is the same as 4.5 what? Cap rate. Everybody with me? So you walk into a neighborhood and you find out the average range is 4.5% and the cap rate, they're sitting around 4.5, okay? Because the market could do that. I'll tell you right now, the middle provinces are running 4.5 to 5.5, maybe 6, standard, right? Out east, they're running even higher, 5, 6, maybe 7, standard. So when you recognize, because with real data, you recognize that after I look at these prices of these properties in this area, they're running around 4.5%, 4.5 cap rate. I can start to understand how to value properties in this area on my own. And I understand. What I know is what? It's 4.5%, 4.5. So let's say a property, I come across a property in that area, okay, and the net operating income equals 43K. Can someone tell me what the value of this property is based on that? Does everybody understand what to do here? What do we do? I'll tell you what it is. Look, you take, if you're trying to figure out what to do with this number, you take 4.5, and what do? You divide it by 4.5, you divide it by 100 equals, I'm sorry, my apologies, that's wrong. 4.5 times 100 equals 400. No, that's wrong too. What did I just do here? My apologies. 4.5 goes into 100. Yeah, 100 I did. 100 divided by 4.5. Okay, so you take 100. Apologies, I was doing it backwards. Divided by this number here. 4.5 equals what? What does that equal? It equals 22. Okay? Then what do? We go 22 times net operating income, and that gets me what? What does it get me? Yes. Well, no, you guys, there you go. You guys did the 0.222. Yeah. Does everybody follow? Everybody with me? Is there anybody confused? And it's okay if you are. Who's not clear on this? Okay. Let's do it again. Never bad. Do it again. Okay. We'll do it one more time and then we'll wrap up. Okay. Okay. Here we go. Ready? Let's pick a new cap rate. Let's go. Cap rate is 6.2. Okay. Cap, which is the same as what? 6.2 ROI. Is everybody with me? Right? We're trying to value a property. That's what we're trying to do. We're just trying to value a property based on income. Based on income. So we ran, say we go into this new neighborhood and we run a bunch of properties on the market. We're trying to understand the market and what's going on in that market. And we find out that they range in, that's their average 6.2 cap rate. 6.2 cap rate, which is 6.2% return. Does everybody understand that? Right? Okay? Is there anybody confused at this point so far? We run 5 properties and we find out that the prices are running 6.2%. You good? No, you don't understand that? What do you understand about that, my friend? Tell me. If you look at a bunch of properties, no, you have no questions. Okay. That's okay if you do. Okay, I'm okay with anybody asking questions. Please don't feel like that. I have no problem repeating this because this is new for almost everybody. Okay, so don't even worry about it. You know, ask the question because I want you to understand this. I want to empower you with the information and the knowledge so you can determine the value of properties based on what's happening in the market. Okay, so you can understand what's actually happening on the ground. So when we go into an area and we're trying to understand what is retail for this area, what do they sell their properties? Retail. And if we run a bunch of properties and we find out they're running at about, roughly 6.2 on average, I run 5 properties. I check the numbers, I check the expense, I check the income. And on average, they give you about a 6.2% return, which is the same thing as a cap rate of 6.7, right? So based on that, what I can do now is do the reverse to find out, what's a good deal. So what I do is I take 100, okay, 100 divided by this cap rate divided by 6.2, okay. So 6.2, and what does that tell you? What's the number? What's the answer to that? Equals 16. So now we do what? If I see a property, 16, 13, 6 goes in 10 times 6 is 36. Oh, it's 16.13? Okay, 16.13. Then what we do is now what we can say is, right, based on income. So net operating, when I come across a property, what I really got to understand is the income, the net operating income, because everything else doesn't mean anything to me. Because only based on that income can I really value this property, right? So in this, I can say the net operating income, right, say is 15,000. I find out that after expenses and income, it's 15K. What do? I take 15K times this number, and what does that give me as a value? 16.13 as a value. What do I get as a value? 15K a year. Who can tell me? There you go. So 200. So check this out. It's 211, is it? Is it? I'm going to go with 241. 241,935. So check this out. Look. 241,935. Okay? This is what we figured out. Check this out. Anything below this is considered wholesale. Anything above this is considered overpriced. Does everybody see what we just did? For this market. Anything under it is considered a deal. Anything over it is considered overpriced. Right? this is what we realize. So this tells us a couple things. Okay? If we want to get a good deal and we're just looking to wholesale, because this is how we got onto this, I need to find a price ranges below this for that type of property, below this, and I look at these prices, these types of properties as an indicator, right? I can start looking at properties. But if properties are, $275, I don't even bother looking at them. It's not worth it. It's a waste of time. They're way overpriced. They're above retail. I'm looking for properties in 200, 180, 190. Now I'm looking for I know what kind of range I got to get on this price on this property. Then you could start with a property, say at 235, and then work it down to 200 or 210 or 215. Excuse me, 215. But it gives you an idea of what's going on in that market, and it gives you an idea of what to start to look at. So, well, you could lower it, wait till the guy lowers it, if not being able to sell it. Yeah, there's a couple of different, that's a different conversation. You're absolutely right, John. We can work on that. We can work on negotiation of that. But what I want you to understand is I want you to know what's happening in a market based on the actual stuff that's happening, the actual purchases that are happening. Do you see what I'm saying? Because if properties, you got it, okay. This is what's going to happen anyways, okay? This is going to be on YouTube. I'm going to download this, put this on YouTube so you can review this. But if you'd like, we can go over it one more time at the beginning of next week's call. Would you like to do that? We'll go over it again. We'll let you, get a better understanding. We'll just do it as a review. Okay, yeah, we can do that. Yeah, no problem. Yeah. It's good. This stuff's important. The stuff I'm teaching you, I'm telling you, it's putting you head and shoulders above the rest of the market and understanding what's happening in a particular market, without question. So we want to understand these things. So I want you to be able to go anywhere in Canada, in any neighborhood, and get a quick idea of what's happening in this neighborhood, where the price is, what's considered competitive, what's considered retail, because we don't want to, if we're taking a property on and we're wholesaling, we got to make sure that we can wholesale it, that we're getting a competitive price. Now, we can go to the other extreme and say, well, let's just use the 10%, the 10% return, 10 cap rate. Absolutely. I want you to do that for properties we hold. But properties we don't hold, that we want to flip or we want to wholesale, there's other opportunity. We don't have to go as deep as 10% as a return. We can still do that because the market's not getting that. The market doesn't price things out that way. We're looking for wholesale. Or we need to know that coming into this property that we're going to make money, or we're not interested. Okay? All right. So next week we're going to wrap up. Next week we're going to go over this again. And I will have an update about the financing and talk about what we can do. Okay, so that's good. That's a good recap. Okay, so we're going to discuss, raising capital and finding investors. Excuse me. A couple things I want to say to you. What I want, I'll teach you what I teach you, but this is. I don't have a source for you because this is what I've learned through the education, what I've learned through experience, what I've learned from several different sources. So I don't have one to point to. I don't actually have one to point to. And I want you to use your trainers and your mentors to help you better understand, what's relevant to what you're investing in. What I'm teaching you is specific generalities, specific things about understanding the general market, so you can give you a better idea of where your opportunities are. Because what I want you to do is I don't want you to waste time. I really don't want you to waste time. I don't want you to be the one dictating, with evidence. With evidence, I want you to be able to say to people, this is what it's worth, and this, and this is why. So people don't convince you that location trumps the value of a property. It trumps the price. oh, you should pay over, over retail because of the location. Well, no, we're not interested in that. We need to make money, okay? Well, Rose, if you find a wholesale deal and then you're to repairs, there's a couple options there. We could use a contractor. We could put it to our database. Also, more importantly, Rose, and this is why I want us to find buyers. I'd rather you have a buyer looking for that property, Rose, than you find the property first. I'm not saying you can't do it that way, but I'd rather you find the buyer first. Yeah, yeah. Okay, and I want to focus on the next couple weeks exactly on that, finding buyers, okay, and raising capital. So I'm going to find more about the RSP situation, and we're going to continue on that theme. The other thing I want you to do is I gave you one creative way with the ad. Remember the ad, writing the ad, and putting in a Kijiji or Craigslist. Rose, if you want, we can email back and forth on a script. We can work on that together over the next few days. I'm okay with that. If you want to do that, okay. And then me and Rose will share with the group next week or the following week. Okay, sound good? Okay, if you're good, type in yes. Okay, now nobody leave. I got to make sure something. I want to give you the link to the YouTube channel. Okay, so nobody leave. Okay, stay with me. But I need to I need to get assistance to make sure that I'm doing this right, so you can do it. Okay, and I want to make sure that everybody can do it. Okay, so give me 1 second. I'm going to step away. Apologies, folks. Sorry about that. So here's the link. You can try it right now. Okay, there's the link. Okay, you can only access it through that link. So somebody test it right now for me, and click the link, and it should bring up the video. And I want you to tell me if you see a subscribe option there. Okay, good. So Sergey and everyone else, subscribe to this channel, so that way it'll alert you when there's a new video. Okay, so you can see the video now. From now on, this is the only way you're accessing that video. I'm locking down all the links. I'll lock them down so you can't access it any other way. So it's just for us for our group. Okay, just for us. Okay. This is ours, and I want it to be ours, and I want it to be easy, accessible for you. Okay, so you have you subscribed? Does everyone subscribe to the channel? Yeah, good. Now that should alert you when there's a new video. So when I upload this video tonight, you should be able to see that video. Not yet, Rose. You can't see it yet, Rose, or you just haven't done it. Good. Good. Okay. You can just click on that, Jean. I want you to subscribe so it'll update you when there's a new video, so you don't have to ask. It'll just update you. It'll send you an email and say, hey, you have a new video listed here. You can see it. Yeah, that's why. It's only you guys that are subscribing. There's nobody else. This is not public. Right? It's locked down. No one can see that video except you guys with that link. Nobody can access it. Okay, we good? No. yeah. We're still gonna go live. No, Jean. This is for the recordings only. But if you miss the recording, it's nice to be able to go back in. It's nice to be able to have one place to see all the videos, right? That's nice. So now, yeah. So you'll be able to see all the videos whenever you want. I just want to make it easy for everybody to access those videos. And to be notified when it happens. So as soon as it uploads that subscription, that's why I want you to subscribe. It'll say there's a new video. There's a new video. Good. Awesome. Any other questions before we wrap up? Yeah, okay, Paula. Yeah, you can do that. We're good. Good. My pleasure. Okay, good. It was a good night. We learned a lot. Good. My pleasure. Okay. Anything? Everyone's good. So I'm gonna close up the window. You'll get an email when this is uploaded as a subscriber to that website, and that should make things easier and smoother for us. Okay. And I'll still work on that website where we can access the Excel sheet, which I really want. I want that to be on a website for you, just so you can access it anytime, just to make it easier. We'll get there. Anyways, everybody have a good night. I'll see you next Tuesday. If you need help during, let me know. Paul will reach out to me, and keep hunting and keep learning, and we'll get there. Everybody have a great night.